If you're studying accounting, someone's probably told you that you need a master's degree to become a CPA. That used to be mostly true. It's not anymore. A growing number of states have added a new pathway to licensure that doesn't require the extra 30 hours a master's typically covers. This video breaks down both pathways, what a master's still adds, and how to figure out which path actually applies to you. For a long time, CPA licensure came down to one number: 150 credit hours. A standard bachelor's degree is typically around 120 hours, so most accounting students were short by 30 hours before they could get licensed, even after passing the exam. As of 2026, that's no longer the only rule. NASBA and the AICPA introduced a new model law that gives states the option to adopt a second pathway to licensure, one that doesn't require the extra 30 hours. A growing number of states have adopted it. Some are in the process of adopting it, and some haven't moved on it at all. Which rule applies to you depends entirely on the state you're planning to get licensed in. Here's what the two pathways actually look like. The traditional pathway is a bachelor's degree, 150 total credit hours, and 1 year of professional experience, in addition to passing the CPA exam. This is the path most people are familiar with, and it's still fully valid in every state. The newer pathway is a bachelor's degree at 120 hours, the standard amount most students already graduate with, paired with 2 years of professional experience instead of the additional 30 hours. Both pathways still require passing the same CPA exam. The difference is entirely in how you make up for not having those extra 30 hours, either through additional coursework or through an additional year of work experience. Adoption of the newer pathway varies significantly by state. Some states passed it already, some have pending legislation, and a handful haven't introduced anything yet. This isn't a settled, uniform rule across the country the way it used to be. Even with the new pathway available, a master's in accounting still has real value beyond just filling a credit hour requirement. It typically covers more advanced technical coursework than most undergraduate programs, deeper coverage of areas like advanced auditing, tax research, and specialized accounting topics that a lot of bachelor's programs only touch briefly. Some programs also come with real recruiting infrastructure, a career office focused specifically on the accounting cohort, on-campus interview slots reserved for grad students, firm-sponsored info sessions, or faculty with direct relationships with specific firms. That's a genuine advantage where it exists, but it's not universal. A well-established MAcc program often has this built in. A newer or smaller program might not offer meaningfully more access than a strong undergrad program at the same school. Worth actually looking into a specific program's placement outcomes rather than assuming the degree itself guarantees better recruiting access. If you're in a state that still requires the full 150 hours and a master's isn't the direction you want to go, there are cheaper ways to get there. Taking extra undergraduate credit hours, adding a second major or minor, or staying an extra semester or two can get you to 150 without the cost of a graduate program. Community college credits are often transferable and significantly cheaper per credit hour than a university. There are also online certificate and credit programs built specifically around the 150-hour requirement, designed to be fast and inexpensive rather than academically robust, but functional if all you actually need is the hour count. Given how much this varies right now, the most important step is checking your specific state board of accountancy's current requirements directly, not relying on what a friend in another state did or what was true a few years ago. Rules are changing quickly. A state that required 150 hours last year may now allow the 120-hour pathway, or may have pending legislation that hasn't taken effect yet. If you're not firmly committed to getting licensed in a specific state, that's also worth factoring in, since the pathway available to you depends on where you're planning to practice. A master's still makes sense in a few clear situations. If you want access to a structured campus recruiting pipeline into Big Four or larger firms, and your undergrad program doesn't already have that infrastructure, a MAcc program can provide it directly. If your undergraduate coursework was light on technical depth, the additional coursework can genuinely strengthen your foundation. And if you're targeting a state that still requires the full 150 hours, a master's remains one of the more structured ways to get there. I went the MAcc route myself. For me, it made sense given my program and what I was targeting at the time. The additional year added real cost, but it also gave me a more structured path into recruiting and deeper coursework than I had at the undergraduate level. Looking back, it's not a decision I regret, but with the newer pathway now available in a growing number of states, it's worth evaluating your own situation rather than assuming grad school is the default anymore. The 150-hour rule is no longer the only path to CPA licensure in a growing number of states. A newer pathway, 120 hours plus 2 years of experience, is available or pending in a lot of places. Which means a master's is no longer automatically required just to get licensed. That said, a master's still adds real value beyond the hours, deeper coursework and recruiting access chief among them. The right call depends on your state, your undergraduate program, and what you're actually trying to get out of the extra time and cost. Check your specific state board before assuming you need to go to grad school. That's where things actually stand with the 150-hour rule and where a master's fits into it, now that the rules are changing. If you want more on the CPA path and getting into Big 4, more videos are below. Subscribe if this was useful.